Strong loan growth, higher yields and lower credit cost ensured that FY23 was the most profitable year for India's banking sector. The combined profits of PSU banks and private banks crossed 2.3 lakh crore rupees, and as banks saw blockbuster growth, asset quality did not suffer. In fact, asset quality was the best that we've seen in more than 7 years. Slippages were down more than 26%. The outlook for the financial year is good, even though margins are likely to decline due to rising cost of funds. Loan growth is expected to moderate but remain in double digits. Amidst all of this euphoria came a warning from the RBI governor. I quote, "Bad loans are made in good times." Today's monetary policy was also an unexpectedly hawkish one, with the governor asserting that there will be no compromise on the 4% inflation target. This effectively could see us hold on rates, or at least hopes of a rate cut in 2023. So what is the road ahead for banks in India's financial sector? Joining me on the PwC and CNBCT V18 Presents CEO Dialogue is a stellar cast, starting with Ashwini Kumar Tewari, the Managing Director of State Bank of India. Also with us, Zarin, Daruwala, the Cluster CEO of India and South Asia at Standard Chartered Bank. Kaushik, Shaparia, CEO of Deutsche Bank Group India. Govind, Singh, MD and CEO of Utkarsh Small Finance Bank. Gayathri, Parthasarathy, PwC India Financial Sector Leader and Global Financial Sector Technology Leader. Sanjeev, Krishnan, Chairman of PwC in India. Prashant, Kumar, the Managing Director and CEO of Yes Bank. Rajiv, Sabharwal, the Managing Director and CEO of Tata Capital. And Venkatramu, the MD and CEO of India Post Payments Bank. Ladies and gentlemen, what a stellar cast we have today to kickstart the CNBC TV18 PwC sector dialogue with the focus on banking. Before I get my panelists in, I am going to toss it across to you, Gayathri, to set the context about what you believe will be the growth drivers, what you believe are likely to be the challenge as well. Gayathri, over to you.
Banking, in terms of as a sector, definitely makes a huge impact on the country's growth objectives. And if you have to be the third largest economy, right, by 2030, then banking sector plays a huge role, right? From setting the context, right, I would like to cover a few points, right? In terms of overall, I think the sector has been highly resilient, number one, right? I almost call it as a little bit, almost insulated. The insulation is working well, kind of thing, right? And also the profitability has increased in the past few quarters very, very well, right? Which is absolutely positive signs for, looking at the sector from a growth angle and what can be, done. More than anything, of course, also, if you look at in terms of the credit growth, 2022-23, it's been, I would say, pretty high, 15%. And of course, I would call it as in terms of all the scheduled commercial banks, be it public sector banks or private sector banks, the NPA gross or net ratio has been, right, in terms of coming down. Digital transformation is all over. It's written all over the country and all over the banking sector. And also in terms of the innovations that's coming across in payments, right, in whether it is UPI, UPI Lite, or anything else that's happening from a fintech ecosystem, etc., all are leading to in terms of how the disruptive technologies can help the banks to further, strengthen and grow, right? That's the kind of, I would say, from a context on where we are, right? What can be done more, or what needs to be done more for next? I would definitely say that we have to reach to the last mile, right? While we are obviously the credit inclusivity that needs to come in, right, in terms of to the bottom of the pyramid, how do we further enhance it? What are the actions that needs to be done? At some points in time, you look at India for the growth, you really need, I would call it as rural entrepreneurship that needs to thrive, right? Really, truly speaking. And that is what will make the country, right, in terms of grow fundamentally even more higher. And also very clearly well-defined, very well customized and well-defined strategy for India and Bharat. I would call it as, right, in terms of two-step kind of an approach that can come up. And of course, usage of, right, I would say again, disrupt through technology, a lot of things through data, right, and data, right, and Gen AI, multiple things that is coming up and which can be used for the banks. And to me, the most important and maybe one topic which I believe is there in every leader's mind here is talent. The way in which we are growing and the way in which the transformation is happening, the talent that's maybe today will not be the same talent that we will be needing for the future. How would you future-proof it, and what kind of upskilling, cross-skilling, etc., that we really need to bring on, right? Finally, I would call sustainability. Definitely, while all other sectors are focusing on sustainability, right, from maybe multiple things, right, from an ESG, I say government is doing a lot of things. How can banking maybe come up with an integrated strategy on ESG? And would that be feasible? And then what are the steps that can be taken?
Well, Gayathri, you've set the context and you've given us plenty of food for thought and plenty of meat to get started with. Rajiv, let's start by talking to you about it. The expectation is 6.5%. That is the estimate that the RBI has put out as well. And there are varying estimates, but all within that ballpark range at this point in time on growth. Now, we're coming off a very strong year for the banking and financial sector. What do you anticipate as far as FY24 is concerned, but also a slightly more longer term 5-year view?
We are a much larger economy. We've got the digital ecosystem working for us. We've seen per capita income growing, and I'm also seeing wealth being distributed in a better way. We've seen the rural economy, it did suffer for some months, but we've seen it coming back. And we're seeing a big thrust for Make in India. I feel manufacturing has the potential to create a lot of jobs too. So if you look at all of these happening, plus, so many other external factors, the China plus one story and so many others, I believe that this year definitely we will see a growth of more than 6.5%. I'm very optimistic.
Govind, let's address this issue with you because I want to understand from you what is going on in Bharat at this point in time, and how do you believe the credit gap that we just spoke of is likely to be bridged over the next few years?
If you talk of digital account opening today, for me the rural India is 100%. Not even a single account is opened manually. But that's not the case in places like Bombay and Delhi, in fact. So there are different reasons for that. So I'm trying to say that rural India has adopted the technology to the extent possible, and the type of UPI use, QR code use is so much in increase right now. So that is going to make an immense impact on the Indian economy overall. We have seen the resilience of the rural economy. In fact, in COVID-1, there were hardly any impact on the rural economy. In second phase, yes, the second wave there were impact, but they really came back very fast. And we are seeing if you look at the day-to-day activities and especially the economic activities in the rural area, they're actually almost normal, in fact. And the cash flow has increased significantly. The activity level has increased significantly. The money flow has significantly improved, and the employment part has improved significantly during last 2 years' time after COVID. And even the repayment rates, which are very, very important, barometer for all these things, have significantly improved during the last 2-3 years. Actually, our rural economy, from the collection point of view, actually have significantly gone up. It is almost very close to normal. The biggest challenge for rural economy has been the operating cost, which all of us talk about that part. Because the ticket size being low, the distance is being high, longer, so it becomes at times challenging. Technology part is playing a very big role in that. And we have seen that happening.
Would you concur, Mr. Venkatramu? Do you echo the kind of confidence that we just heard from Govind there?
Absolutely. There's no doubt about it. In fact, I would like to add that if you go back maybe 8 or 10 years, the way we've started with Jandan, probably we've gone in a very, very systematic way in terms of creating that infrastructure. First, we started with Jandan, where almost 46 crore accounts got opened. And then the DBT pushed through these bank accounts. So which means the first step of financial inclusion, what is required in terms of access to these services. And third most important, access to these banking services. Today, if you look at the kind of BC network that is available, either through India Post network or through other BC network, I think that has been very, very strong. So all of this have added in creating a physical infrastructure. And I would definitely add to one point what Govind said, that in these kind of areas, it has to be 100% digital. So what we've observed is that wherever even a small element or component of paper-based process comes in, that becomes absolutely unscalable.
Okay.
So if it has to be scalable, it has to be 100% digital. And the adoption rate has been phenomenal when it comes to this segment of customers. So it's more about leveraging this infrastructure and add more and more services to this is what can actually pave way for the future growth.
Well, Mr. Tewari, let's talk about the road ahead now. And there is confidence in growth picking up from where we currently are. What is that going to potentially mean? Where do we see credit growth? Where do we see private investment? What are the signs that you're picking up?
Yeah, so you're right. The bank balance sheets are cleaned up over the last 4-5 years. Banks have made record profits in the last 1 year. Almost every bank is doing very good profits. Going forward, as I see, there are big opportunities. One opportunity is the climate finance itself. Now, with the targets which India has taken till 2070 and 2030, the interim targets, the opportunity till 2030 itself is around 30 lakh crores. Now, I say this when our balance sheet domestically, the loan book is about 28 lakh crores. So the entire loan book, I mean, we have almost we can double that loan book if we capture the entire opportunity. Of course, we alone won't do it. So that's one big piece which we have to look at, and it consists of myriad things like things as from EVs, the battery, the switching, the swapping technologies, renewable of course continues to be a strong play. Then going forward to the battery manufacturing, the pump hydro, all kinds of things. So I think that's one very, very big opportunity which all banks have and which we should start to leverage very quickly. But the opportunity I think we still have not leveraged very well, the banks especially, is the urban. The urban financial inclusion and the way we deliver to urban, because too much focus has been there on rural, rightly so. But I think India is urbanizing at a very fast pace. And apart from the urban infrastructure, which is a separate category where a lot of opportunity exists, but I think we need to take into account the more and more people coming to cities, and these are people with slightly higher earnings. Just that they are not your typical salaried class employees in a good company, and how do we take care of those, whether through a BC model or through a MI5 model? That's something we need to work out. So that's another big opportunity which probably has to be leveraged. Infra continues to be very, very big opportunities as always. So the entire road building, the REITs and the InvIT models which are coming up, which are getting refined, monetization program, all of that continues to be a very, very big opportunity. So I think we do have very large opportunities existing for us as banks, and times look good going forward.
Sanjeev, first cut to you on the back of what you are hearing from India's largest banks, both public and private sector banks, and of course NBFCs. Signs of confidence, signs of growth and potential headroom for growth from here on.
I think it's definitely a good time from a bank standpoint. I think the fact that the bank's balance sheet have been cleaned up, the NIMs have been going up over the last few years, etc. I think they're all good things. But I'm also slightly concerned when we look at the way the banks have grown their balance sheets, and a lot of it actually is driven by retail loans. Now, I mean, the economy needs to continue to be in good stead, and there are clearly certain areas that were identified by Mr. Tewari and others, which could actually challenge the economy per se, and because of the composition of the loan portfolio of the banks, that could be a challenge that they may face. And I'm sure the governor was referring to that and many other things. So I would say that yes, I think we have had because of the insolvency code, because of the credit offtake hike, which Gayathri also mentioned, maybe the pent up demand. I think we have had a good few years. And there are good reasons for us, because geopolitically, geoeconomically, India seems to be in a much better position. Services, captives, growing, manufacturing, through all the production linked incentives, etc. There's a lot of good things happening, but there could be bumps ahead. And I'm sure the banking industry would be up to it.
PwC and CNBCT V18 present CEO Dialogues.